following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
Good. This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests, and
well, listen,
keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Follow what you love, and it will take you where you want to go. Natalie Goldberg. Market-wise, let's take a look at it out here. We have the Dow Industrials down 56, NASDAQ off 17, S&P's down 9, gold contract up $9.10, traded at $1,065 an ounce. Silver flat at $14 an ounce. Platinum down $4 at $8.31 an ounce. Copper flat at $2.04 a pound. Light sweet crude down 8 cents at $41.62 a barrel. The oil market, folks, wants to go break that $40. It's hammering on that. We had a high volume low last week. I suspect we're going to go after it. More than likely, we're going to break it. It's going to be pretty wild watching this oil market shake out. Bonds, 10-year flat at 127.01. 30-year up 6 ticks, 155.14. Now, bonds, folks, have rejected the lower price once again today. They have lighter volume. It actually looks that the bonds, both the 10 and the 30, may have set up an ABC structure on the way up. It looks like the C point is in today. This is going to be wild watching this shakeout, man. That is saying that bonds want higher price, lower yield. King dollar. King dollar up 147 ticks at 100.22. Now, what King dollar has done for the last 10 days, you have your ABC price projection, gets up there. Last good week, it's been going to higher highs, volume contracting in a huge way after being down twice with volume. I expect what you're going to see is that King dollar more than likely is going to back down once again. If you do get an expansion of volume, this next time coming down, as we did not the last time, 2 times prior, both times prior to that, that's saying that King dollar is just about done on the upside. Euro down 20 ticks right now at 105.73, and the yen is trading at 123.10. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so check it out. This is subtle, man, but this is going south, and this is what you have. We've done 60 million shares out here today. You got to a high of 209.89, trying to actually get over the highs, couldn't handle it. You're going to close under the 209.83. Right now, we're 208.87. That's going to be a test of the highs, lighter volume, rejection of higher price. Bottom line, that's going to set up a run down into the November 13th level. That's 204, which is the high, 202, which is the low. NDX 100. We take a look at the Qs, same setup in the Qs. Qs got to a price point today of 114.65. Trying to get into that 114.94 level, couldn't handle it. Bottom line, you're backing down off it. What the Qs did, if we go over to the NQs for a second and take a look at them, it's pretty amazing, actually. The counter trend bounce that we had in the middle of the day, the NQs did a perfect 618 retracement from highs to lows. It was really wild watching this thing shake out. You know, intraday, folks, it's always a trip watching volatility inside the marketplace. You know, the NQs had gone from a high out here of 4,700. They get it to 46.53. When they started to bounce, I'm looking, I'm saying to myself, well, where the heck are you going to bounce to? And it was a big bounce, by the way. But bang, hit the 0.618 retracement, then said, see ya, don't want to be a backs down off it. I expect you're going to see more backing down as we come into this close out here today. Gold contract, what do we have with gold? What we had with gold is this. Gold got smoked on the 27th. We go from 1074 to 1051. We do that as we get into the lower price. You had some juice behind that move. Well, no, we didn't have juice. We had 52,000 contracts. We did all of 4,500 contracts out here, because what is happening right there, okay, is that this roll has been happening inside going from one contract to the next contract. We're on the G contract right now, and what we did out here this morning is that we tested that low. We got to 1052. The low was 1051.60. You're at 1064 right now, and I want to see this thing get back inside 1084, but it's done some real juice out here today. What we also have inside that gold market is this. As the gold contracted traded lower, the XAU and the HUI did not back down. That's a real positive, folks, inside the context of the miners in general. Bonds, what do we got with the bond market? The ever-ready bond market, folks, is just a trip. Bottom line, it looks like the 10-year, we got down to 126.28 today. You're at 127. This thing is building cause to get up into this 128.08 area. If we take a look at the 30-year, what you have with the 30-year, that's at 155.13, up 5 ticks. That rejected the 154.29 today. Did it with lighter volume. Now, that's the technical basis that's set up. The fundamental basis is intriguing, too. My son Tommy and I do a program at 10 o'clock every morning, so check it out at TFNN. And we were talking this morning about bonds in general. Well, check this out, folks. Because the because the economy's come back, and the number of taxes that are getting collected by the government, the bottom line is that next year, 2016, they expect 27% less issued bonds and notes. What is that all about? What it's all about, folks, the government needs less money in order to operate, but 27% less issuance inside this bond market does what? Less supply, and there's still continued huge demand. Let's go to Tim in Denver, Colorado. Hey, Tim, what's going on, brother?
Hey, happy holidays, Tommy.
And you too, man. Great to hear from you.
Good to hear. Good to be talking to you.
So, LABD, right?
I'm going after those biotechs. Do you like this trade or not?
I love this trade. We are basically in this trade right now, okay?
Liking it, man.
Okay, so check it out, folks, okay? The LABD, okay, is the direction 300% bear of the biotechs, of the S&P Biotech Select Index, okay? Bottom line is that what we have out here today, so check this out. Out here today, folks, what you have is this. You have Biogen down 2%. You have Regeneron down 3%. That's $17. You have Intercept Pharmaceutical down 4.7%. You got action here. Let me pull this back up.
I got in a little early, and then I was buying pre-market like a son of a gun. And where do you see this going, do you think, Tommy?
You stay right there. We'll come right back, okay?
Okay.
Awesome. Stay right there, folks. This is Tom O'Brien. This is Tim from Denver. We're going to be talking LABD. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow Industrials down 52, Nasdaq's off 16, S&Ps are off 8.5. We're talking with Tim from Denver. We're talking about LABD, which is the Direction 300% inverse correlation of the S&P Biotech Index. Bottom line, I know that you've traded this before, Tim, and the biotechs, folks, in general, you have to make sure you use your stops, but the bottom line, when you get them and you get them right, it can be pretty intense. So
it seems like I always leave some money on the table, and what do you think this thing can run to? You got to get in and get out of it. You know that, but I don't want to pull the trigger. I seem like I've been doing the gold, now getting back and forth.
Yep.
And the oil, it's been great. It's been great. Well, what do you think this thing can run to? What are you going to shoot for, you think?
Okay, so this is intense, man. Because what happened here, folks, is that we actually caught this. And what Tim was just saying about getting out too early, what happened is that we caught this on the 19th of August, okay? And what ended up happening, it was such a fast acceleration. That's when the IBB went from 368 down to 284. So that was pretty amazing, okay? And what we had there, of course, is that the last day that it was down, it would just, it went down 65 points in a heartbeat. So, yeah, we closed it. Now, that being said, if we go back to LABD for a second, okay, so what you have here is that we have a high volume swing point at 66, and we're at 30 bucks. Like, okay, man. Okay, so what do we have to cut through first? Well, it has it going today. So it has the price spread today. You get a big volume expansion today. You're at 833,000. So that's saying your first level is going to be, the bottom is 36.25, the top is 39.88. And at this point, man, I'd let it just stay there, because what is really unusual today, folks, is this. What you had is this over the weekend. We had Asia get hit hard. That was down 5%. And then last night, however, though, it rejected lows. Okay, so, but it was still down 5%, and it was down good. Europe was up really good this morning, folks, until we opened. Europe was up over 1%. Our market couldn't handle it. Now, that being said, that our market can't handle price on the first day back from a holiday is telling me that, guess what, there's going to be a rough week, man. And the bonds also, Tim, are telling me, man, guess what? Those bonds want to go higher. I'd stay right there. You're going to probably be at 30. You know, what happens is that these compound on the way up and they get defensive on the way down. So, you know, you're up $1 today. Now you're going to compound $30.69 tomorrow. You know, the bottom line, you're probably going to be at 36.25 pretty quickly. So
I was looking for 36, and then I can, you can always start another day,
You can,
So,
and it's important with these that, they explain very well, folks, that they're daily trading vehicles, okay? That is the mantra behind the leverage products, and it's important to understand that, so.
Oh, it is. You got to know that when you play. Yeah.
You do.
Yeah, exactly.
You do.
Yep. Tommy, thanks a lot, man.
Thank you. Hey, man, I was looking. You guys, you got a little. Oh, man, you guys beat us last night, man. Hey. Oh, man.
To be fair to you guys, I mean, you're beat up. You are beat up, and I don't like what happened to Gronk. I'm feeling bad. I haven't heard what happened.
No, he's going to be all right. Thank God. We think he's going to be all right. Yeah,
Well, that was a good game. A good game.
That was a good game, man. That Pittsburgh game was insane too. Oh my God, that was a crazy game. Pittsburgh, Seattle.
NFL this time of year is great.
It is, man. It's crazy. Okay, brother. It's always a pleasure, man.
Be safe.
Have a great one, man. Have a safe one. So this market right now, it's really intriguing. If we go over to the S&P just for a second, folks, we'll take a look at these futures. It's to walk in on a Monday, after a holiday, it's like, it's not that it had to be a flat market out here, but with Asia getting hit, they come back. With Europe holding tight, our market is saying, hey, guess what? This thing wants to go south. The S&Ps themselves have given up, quite a bit for a slow day. We've been at the same place. If we go back to the 3 black crows, man, those 3 black crows are not only in place. In fact, here, watch, I'll bring you over to Asia. If you want to see something that's really wild, you go over to Asia. Asia has actually, many of the markets have the same setup, meaning the pattern that is set up in there. In Asia, that performed like just amazing. So the 3 black crows in Asia set up same dates. Well, it's 1 day later because that's how it would work. It's the 20th, and when you're dealing with the 20th of August, that was 3788 in Asia, right? So it went from 3788 down to 2800 in 4 days. You did a counter trend bounce, and we got up to 3668, and then bang, it just gives it up in spades, just like out of nowhere. And I suspect, guess what? This thing's going to be pushing into the lows again, once again tonight, because 2 nights ago we had 35 billion shares. Last night you had 30 billion shares. You're still into 33 billion. That's just too much pushing down. So that I suspect what very well may happen is that the 3 black crows that we're talking about, more than likely, we're going to get a signal and more information from the Asian market first. That's the way it seems to be set up. If we go over to the UK and we take a look at the UK out here, the correlation inside holding on price and volume, what we have at the UK out here today, that just backed off slightly. The DAX in Germany, that went up to the gap, so that's proven resilient. In Germany, I mean, it's not at its highs. 11,800 is the highs, but that's a resilient market. There's no 2 ways about that. And I suspect what you're going to see is that Volkswagen is going to, bottom line, take that to lower prices, because Volkswagen is having a huge problem. We go over to the NQZ. We go over to the NQs once again, and you're going to see they're going to go right for the lows again. Pretty amazing. Right now we're at 4.664, and 10 points lower would be the lows. The S&Ps, I believe, are already there. They just someone just took these S&Ps. Yeah, they take these S&Ps out to the woodshed. So the S&Ps, the difference is that the NQs had done a 68%, 61.8% rather, retracement intraday. The S&P did a 50% retracement, and now what the S&Ps have just done is that they broke their lows of 2080 and 21,000 contracts, 16,000. Let me see what we have here. Yeah, oh, you're going to blow them away on volume. Blow them away. It's an ABC down. So here, check it out, man. Big ABC down, folks. Fire away. Here we go. 2094 is your A. 2080, so it's 14 points, which gets you 74. Well, right next to it. 2074 is the ABC structure on the way down. Right now you hit so A to B equals C to D. It broke it with volume. Let's go over to the NQs for a second. This way you can jump ahead. This is like a little trader's paradise intraday here. It's really insane. As NQZ, and remember something, these don't last forever, so no sleep until these things are over. The NQs are just going for their lows. That'll take. We'll get to those lows before the day. Yeah, easy. You get 34 minutes to get those lows. Right now we're at 64,663, and that's only 10 points lower. It's Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 70, Nasdaq's down 20, S&Ps are off 10.5, and inside those S&Ps, you got a little weakness in there. They're taking them and they're taking them south pretty quickly. Some of the high volume stocks in this market right now, you get Netflix down $2.30, Facebook's off $1.30, Walt Disney's down $1.60. Now, Walt Disney took it on the chin too on Friday, that half a day. They came out with, they lost 7 million customers, subscriptions in ESPN. That took it from a price point of $119 down to 113. You know, bottom line is that this baby looks like it's going to stop making its way down to this $99 level again. You're at 113, so big number there. Some of the Dow stocks. So we have inside the Dow. Well, here, let's see what the strength versus the weakness is inside the Dow. Strength inside the Dow right now is Caterpillar. That's up $1.29. You got Chevron is up 128. Microsoft 60 cents, and Intel. Whoops, there she is. 1 second. Intel is up 33 cents. The laggards. Walmart's down $1. You get Nike off 223. Merck is down 83, and Disney is down 167. If we go back and we take a look at Apple, Apple just can't get out of its way, folks. Apple's up 67 cents. You're trading at $1.18. The bottom line. This is a test out here today of all these last highs and of the gap down. It can't handle it. Can't handle the price. Can't handle it with volume. That's saying Apple is going lower. And of course, we know that this is shopping season, and so that's going to be pretty intense if Apple can't even catch a bid under this season. What we do know from the numbers that came out over the weekend is that this was the first year that online retailing overtook store retailing. So clicks overtook bricks. And I expect we're going to see a lot more of that as we come into the this season. Bottom line, big number though, man. It's pretty amazing. And once that tipping point has taken place, which it has, folks, okay? Oh, man. These retailers, you don't want to be in the retail business. There's no two ways about that. One of our Tigers were just giving a heads up that Amazon's down $5. And it is now. Check this out. This is pretty cool. Amazon's not only just let us down $5.60, but guess what? We get an expansion of volume on the way down. So Amazon's going to go after $6.49. We're at $6.67. Well, this is going to be wild. This is going to be like selling the news, man. This is going to be crazy. Because Amazon, no doubt, they're definitely going to be the leader out there across all sales. What you do have, though, is that you are paying $1,000 right now for $1 in earnings in Amazon. So you talk about value. Yeah, the value is absolutely pretty incredible. No two ways about that. If we go back to the gold market for a second and take a look at this, what is intriguing to me out here today and last week is that the XAU, the HUI, as gold got smashed, rattled, rolled, the whole ball of wax, guess what? The lows in the equity is November 17th. You know, XAU is at $46, was 43, 44. You're at 46 right now, and these equities have some juice behind them today. I won't get the volumes on the XAU, the HUI until 8 o'clock tonight. HUI is the same setup. The low in the HUI, past low is November 18th. That was at 102. We're at 110 right now. In both cases, they look like they get some traction. They have some traction out here today. You go back to that bond market, and the bond market it does continue to say it wants higher price. When we look at the world markets, it just totally makes sense because world markets, folks, we are still at 2.2 in the 10-year. France is at 7/8 of 1%. Germany's at 4/10 of 1%. I mean, France is at 7/10 of 1%. Germany's at 4/10. Italy is 1.4. You know, as you go through these, it just absolutely makes zero sense that we are percentage-wise. What percentage-wise? Some of those were 100 and 200% over the rate that is getting paid in Europe. And guess what? If you're a fund and you're still buying AAAs, it's the same AAA. Do you want to get paid 2.2%, or do you want to get 4/10 or 7/10 of 1%? You know, bottom line, when you look at that, it's saying to me, and you put that together with the aspect of the 16% less, 16% or 27%. Forget what that was now. Here, let me see. USC. We were talking about the issuance of bonds. Big drop. Here it is right here. No, it's 27%. So in 2016, there's going to be, they're speculating, okay, that it's 27% less bonds are going to be issued. Now, you want a kicker, man? This is really a kicker. That the Treasury only, well, you see this number. This is pretty amazing, actually, of what they've actually issued. the amount that the Treasury thought they were going to issue only 6 months ago versus what they've just issued right now is in half. I'll pull this up at the next break, but it's an intense number, folks. It's an intense fundamental number of the amount of debt that's going to be issued versus what they were going to issue only 6 months ago, because there's that much cash that's coming in. Now, what's going to be really intriguing, I talked about this last week, is the aspect of tax loss selling, because this is going to be the first year that I suspect you're actually going to see this in the last 7 years. And the reason is that when you take a look at a chart, what you're going to see is that each and every year from 2009, this market has been up. And the difference here is that last year at this time, it was still on a trajectory upside, but it hasn't moved in the year now. That's the first part. The second part's much larger. The second part is that there are many stocks that are down not only off their highs, but they're off their highs by 20, 25%. So in that aspect, what I expect you're going to see out here is that you're going to see plenty of folks saying, okay, I have plenty of gains. Do I want to do some tax loss selling? And I suspect you're going to get that. Why? Because the amount of losses that are out there are pretty substantial in individual equities. The gains are pretty substantial. And the real key is going to be, do you want to pay zero tax and do some tax loss selling and sell some winners? And what will that do in the aspect of the market in general? That drags the winners down as they start selling some of these high flyers that have been out there for quite a while. Just like, actually, we just go right into Amazon. You know, you can go right into Amazon. It's like Amazon has been in a straight line since August 24th. So you're not even talking 2 months. So check this out. You're not even talking 2 months, and Amazon has gone from 451 to 681. 451, 556. That's $230. That's a 50% move in, September, October, November. Yeah, in 100 days, 50%. So you're going to see some selling. You're going to see some selling. You're going to see some tax harvesting. You're going to see all of the above. This is Tom O'Brien. This is TFNN. Dow Industrials right now are down 49. Nasdaq's up 14. S&Ps are down 7.5. You stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We have the Dow down 59, Nasdaq's up 14, S&Ps are off 9.5. We take a look at the SPYs. The SPY is trading out here at 208.79. You have 71 million shares. You tried to get to a higher high, couldn't handle it. This is saying that, okay, now we're going to go first off the low that was established out here on the 24th. That was 207.41. We'll see what happens when we get down there. But bottom line, I suspect this thing looks like it's going to make a run to the November 16th area, which is 202.18, which would be a big number. The NDX 100, we have with the NDX, same type of setup. NDX a little bit better shape. The SPY all day has just been going down with zero. Well, we had a 50% intraday bounce, but then the SPY came back and broke its lows. The Qs look like they're going to do the same thing. We'll see if, in fact, they can make it down there to the 113.65. It's only 30 cents from where we are, but that is double up from where we are right now because we're only down 32 cents. The small caps, we go over to the small cap arena. Small caps out here hanging at their highs. And the small caps I wouldn't be shot in the small caps. That's the bottom line. Because what have happening inside those small caps is that if, in fact, the gold and silver is off the bottom, you'll see them starting to get some traction because there's a lot of Russell 2000 stocks that are inside that commodity market. Now, let's go over to oil, CLF for 6. We take a look at oil. What we have with oil is that this baby is pushing the bottoms. Now, this is going to be intense, man, because we right now are on the F contract. And, the F contract brings you into the December contract. First deliveries in January. It's actually the January contract is 06. The low in this contract was established last week. Last week, that low was $40. Well, it was actually established in August, but it wasn't trading a lot in August. The low is $39.97. Oh, we have a high volume swing low at $40.41. What I expect you're going to see is we're going to go after that number one. Now, if we go after that with volume and you break this $39.97, man, we are going to see. Let's put the continuous contract up and put this on a monthly, and what is wide open is $32.40 once again. Pretty amazing. They had a guy that is in the private equity business. He happened to be broadcasting from Boston on CNBC this morning, and he was amazing. I mean, it was really cool how much information he gave out in the matter of about 3.5 to 4 minutes that I thought was really clean, good information. And what he was explaining, they were he was explaining that he felt oil was going to go lower, and he's in the business, by the way, okay? So it was like, oh, man, that's wicked when you're in the business, and, in fact, you're thinking oil's still going lower. And what he was explaining was that the amount of wells, our own production, that have got shut down were substantial. But guess what has also happened? Simultaneously, what was happening is that the amount of drilling and the switch off to higher production assets went up dramatically. So that all drillers right now, instead of drilling a well that only gets, let's say, a gallon or a barrel out every 2 hours, they were drilling, and I'm just giving you numbers so that you can see the expansion, they were drilling wells that gets you a barrel out every 20 minutes. So they're using their better commodities and the better wells in order to basically have much cheaper oil out of the well head. And that being said, he thinks that you're going to see a lot lower oil prices and a lot more folks go out of business this coming year. Now, that being said, what he brought it to being was that 2017, 2018, yeah, you're going to see higher prices, but he thought it wasn't even close to the bottom. It was really big. I forget the guy's name, but it was pretty cool how he put it together. And I understood, you know, this whole deal, and this is what has happened with the actual metal miners also, folks, is that like Goldfields end up making $15 million this quarter. No one ever thought they're going to make any money because the bottom line, you get gold running out at 10.65, you know, the dollar's high, all of the above. Well, guess what? What they did, and they did very quickly, well, couldn't be very quickly, it was over the course of a year and a half, is that they start mining their higher ore levels so that you could take less rock out of the ground and get more gold out of the ground. Now, for a metal miner, that is a lot tougher to do than an oil miner. The metal miners are doing it, continue to do it. The oil miners, folks, can do this in 30 days. That's how amazing, you know, because the difference is oil is much easier to get out of the ground than rock is. That's when you cut to the chase, that's how the chase goes. Let's go and we take a look at Walmart. So Walmart out here, that also is coming down with volume increasing once again. Now Walmart's, you know, off this high from the last 6 months of $72. You're at 58. You get volume come out of the equity again. It's going to go after these lows again, man. This is going to be just amazing. You know, we had a dead cat bounce come in last week. We went from 56 to 61. That's an anemic dead cat bounce, by the way. You're already trading. You try to close up the gap right now from how it gapped higher. The problem from Walmart right now is that you get an expansion of volume as you're trying to close the gap. You know, the gap level is at 13 million. Bottom line, you come into that with 10 already. So that little baby's a problem. You go over to Big Blue, IBM, which had a counter trend bounce. Same setup, and Big Blue looked like that counter trend bounce is almost over right now. It's up 82 cents. Off the low of 131, you're at 139. You are slamming into 16 million shares versus 2.7 million as it moves higher. That's an anemic bounce in an extraordinary way. Natural gas. Let's go take a look at natural gas. Natural gas out here today hit another low. Now it's off that low. Bottom line, still do not touch this natural gas contract. We're at 223. It hit 217 this morning. And you'd have to prove it that this thing can go somewhere. You know, it just keeps hitting lower lows, and it's not holding price. It's going to be really hard right now for natural gas to get by 227. Hit 225 today. That 227 area, that's where we had come down really hard on November 30th. And I expect that is still going to be hard to get through. The amazing part, of course, is that we are into winter. The storm's going across the country, you know, and we'll see just how much oil and natural gas we actually need. But the oil market's screaming that it wants lower price. The diesel market, which did get a good bounce, by the way, diesel is trading right now at 135. Yeah. So check this out. Yeah, you got a bounce on it last Thursday and Friday. Guess what? We're cracking lows again, and we very well. Yeah, you got an ABC down. This is amazing. As soon as we come back, we'll give you that ABC down. All you folks in the Midwest, up north, you can have some less expensive oil come this winter. Stay right there, folks. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow Industrials right now down 57. You get the Nasdaq off 14. S&Ps are down 8.5. So let's go over to the S&Ps for a second, because this is always cool when you have an ABC structure on the way down, the way up, that hasn't finished off. So what do we have here? You got, if we go look at these, we take a look at the futures. When we broke the B point, you broke it with volume. Okay, so we broke this to 2080. You broke it with volume. Now you're coming back inside that area. Why I say it good? Well, guess what? That's how the setup goes for tomorrow morning, folks. I suspect, let's see. Yeah, you're at 1554 hours right now. So this will probably bounce into the 83 level. Keep that in mind, okay, in the morning, okay? Because price projections, they like to get hit. So that is a big number, NQZ. Let's go look at the NQs and see how they reacted when they came down. We take a look at that. So NQs, you got to 4661. That didn't break the swings. The swings have to get a lot lower. The swings on that is 4653. Bottom line, though, S&Ps want lower price, and we'll see how that market can get any traction out here tomorrow morning. What's going to be interesting is that we go to the Hang Seng. We take a look at the Hang Seng. Hang Seng closed down 71 bucks. That was prior to the night before. The night before, it closed down 500. Okay, so you're talking big numbers, and it's got juice, man. This thing's got juice to go after its lows. You're 21,996. This 20,574 wants to go after it. You know, we'll see if in fact it has any juice as it's getting down there. This is going to be you're going to see some action here that's going to be very fast, very furious, and what it has to do with, which I brought up a little bit earlier, folks, it's going to have to do with selling, period. Okay, but what you're going to have simultaneously is you have tax selling. People just getting rid of dogs that have been out there. Then you're going to have some of these high flyers going south, because that's going to be the matchup inside the tax selling deal. And if we look at the calendar, so let's look at this calendar, because the calendar is going to be important inside the aspect of, okay, so this calendar, can I move this over here? So this calendar is going to be important to the aspect of where we're at. So this year, the end of the year is the 31st. There's still plenty of time. There's still plenty of time. That's a lot of trading. That's a lot of days that you can have a lot of selling, because all you have to do is get rid of everything and match it off by the 31st. But that does give you 1, 2, 3. It's realistically 4 full weeks. December 1st is tomorrow. You know, you get 4 full weeks of trading. You know, so that's a long period of time. And I suspect what you're going to start seeing is you'll see the high flyers start moving, because what normally happens is this: if they know you're going to sell your losers, what you try to normally do is that, okay, you go sell some of the winners. So just in case the losers move back a little bit more, you're going to be losing less. So most of the time when you see managers kind of doing that deal out, you know, many of them will do them the same time, and some of them wait too long, meaning to the end of the year. I don't think they're going to wait this long this year. The reason I'm saying that is that the losers are so dramatic in some of these, you know, it's the underlying deal here, folks. The underlying deal in the market has been weak. This is Tom O'Brien. This is TFNN. Dow down 59, Nasdaq off 16, S&P's down 9. You stay right there, folks. We're going to be coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. Dare to believe. Unknown author. Market-wise, let's take a look at it out here. We had the Dow Industrials down 78, Nasdaq off 18, S&P's down 8, gold contract up $8.80, trading at $1,065 an ounce. Silver up 2 cents at $14.03 an ounce. Platinum down $4 at $8.31 an ounce. Copper flat at $2.04 a pound. Light sweet crude $41.60 a barrel. Oil looks like it's going to go after its lows, folks. This little baby, you break that 39.75, and we're going to see 32 bucks. That's going to be a mind blower, but that's how this baby's setting up. Bonds, the 10 and the 30-year. 10 was flat out here today. It rejected lower price. You're trading out at 127.01. 30 rejected lower price, up 11 ticks. 155.19. Both the 10 and the 30 look like they're ABC structures on the way up. And if they are, folks, it's going to be a total mind blower. Because, of course, the Fed wants to go up on rates. The bond market is continuing to say that the Fed may want to go up on rates, but guess what? The 10 and the 30 also want to go up on price, down on yield. And you know what? You can have all of the above, folks, because the rates that the Fed we're talking about have to do with the short-term rates. It would be very unusual, that's for sure, if the Fed goes up on short-term rates and that 10-year bond doesn't move. You know, as soon as the short-term rates go up, the 10-year bond normally moves. But bottom line, we'll see where this shakes out. King dollar. King dollar up 187 ticks. We're at 100.26. Now, what King dollar has done is it continued to get to higher price. The volume is contracting in a very large way, though. I suspect you're going to see King dollar come off those highs, pull back. We'll see whether we have an expansion of volume on the pullback. Euro. The euro is at 105, and the yen is trading at 123.11. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, we had an expansion of volume. You're at down 87 cents, which is not the end of the world. But guess what, folks? Bottom line, you're at 208.69 on the SPYs. That's going to make the run to 202.18. Bottom line, you're starting out on a Monday at the end of a holiday week. Market can't hold, and the market can't hold. That is after Europe being up over 1%. They didn't close. They only closed up 0.5%. But bottom line, the market had every right to get to higher highs, not only to get to higher highs, to blow these highs away. We've been at the same place in this market. Well, you can make the argument we've been in the same place in the market since July 20th. But so between up and down. Bottom line, it can't handle these higher prices. The NDX 100, the 3 Qs, they got to 114.65 out here today, closed at 114.02. Also subtle, yet had an expansion of volume. We've done 22 million shares out here today. Bottom line, I expect the Qs will also go after 109.48. Gold contract. What do we have with gold? Correlation goes with gold. Is that gold contract went after its lows. The gold contract got toasted and roasted last Friday. Where is she? There she is. When, of course, we had a half a day. We tested that low this morning. Had lighter volume, rejected the low. We're trading at 1063 right now. If you are a gold bull, you want to see it inside 1060, 1084. Good start out here today, no doubt. The XAU, the HUI, they're indicating that gold wants to get into higher price. Why? Because even as gold got smoked, the XAU and the HUI made their lows on the 17th and 18th of November. They both are higher, and what we did have out here today is that we had some price movement inside those equities. Now, bonds. The bond market, folks, just pretty amazing. There's no two ways about that. Bonds just want higher price. You know, the last downdraft in bonds, it started October 15th. The 10-year was at 129.20. It gets down to 125. You're at 127.01 right now. This wasn't even a deep retracement. This is the thing that's amazing about bonds, folks. It didn't even do a deep retracement. It snaps back to 127, and this baby looks like it's going to make the run to 128.08. And, you know, bottom line is that you make that run, and bonds are right back up at their highs. Now, let's go to this dollar. So this gets really cool. The dollar index made a nice run. What you have now is this, is that each day the volume is contracting. We've done 21,000 contracts out here today. And in order to stay up into a higher price in a big way, bottom line is that you're going to be pushing about 35,000, 40,000 contracts. We got to 100.36 out here today. So it's at highs, and guess what? It can go higher. When you see a contraction like this, however, that is setting up a pullback. If we go over to the euro bottom line does not look like it has to go to higher price. So inside the dollar index is 60%. The euro is 60% of it. So you can make the case there that, hey, listen, man, that's 60% of it. It doesn't have to go higher. That being said, if you go to the Canadian dollar, and this is just a correlation, a much larger correlation inside commodities. What I'm doing today is putting commodity currencies together with what the gold contract has done, what the dollar's doing. And if we look at the Canadian dollar, it's at 133. This is the inverse correlation. That looks like it's topped out. Looks like it wants to get down to 128, which would say that the Canadian dollar will get stronger. It means our dollar will get weaker. If we go to the Aussie dollar, we take a look at the Aussie dollar. Same setup in the Aussie dollar. Now this is inverse correlation also. This is 72 cents to $1 in the Aussie dollar. That baby looks like it wants to go to 73, and it very well may want to go to 78. Now, both of those big commodity currencies, folks, okay? So we'll see where this whole shakeout is going to come down. If we go over and take a look at the silver contract, what we have with silver, silver has to get off the lows. Silver didn't get trashed like gold did, but yet silver didn't even get any traction on the way up either. So pretty intense all around. Actually, hold it. I got to change these contracts. 1 second. Silver this year. So okay. So we're at 1406 right now. Yeah, same deal. It's only 26,000 contracts. That's not enough. That's not enough inside that silver market to get up into higher price. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials closed down 78. NASDAQ off 18. S&P's down 7.5. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finished down 78. You had the NASDAQ down 18. S&Ps were down 10.5. And, folks, as you come over to our website at TFNN, we just finished Thanksgiving. What you're going to see right in the top of the carousel, you're going to see Salvation Army Tiger Dollar Holiday Sale. Now, what this is all about is this. We've had Tiger Dollars for quite a while. And Tiger Dollars are good on all products at TFNN. Totally transferable, no expiration date. The way that this works, and you may have seen this before, because we have done this many times in the past, what you have is this, is that starting today, going until December 21st, we will give you a 25% bonus on any amount of Tiger Dollars over $500. Now, out of that, we are going to donate in your name from 5 to 10% of the cash amount to the Salvation Army. What's really cool is that, we've done this. Salvation Army happens to be right down the street from us. We called them up the last time that we've done this, is that we give them the list of names. They send it right to your house as the donation. You can write off that donation. So to give you an idea how this works is that if you purchase $500 in Tiger Dollars, you will receive $625 credit that you can use on anything and everything at TFNN. We will donate $25 in cash to the Salvation Army in your name. Let's say you purchase $1,200. So it's 5% up to $1,000 that we're going to donate in cash. It's 10% over $1,000. So let's say you purchase $1,200 for $1,500 in Tiger Dollars. You give us $1,200, you're going to get $1,500 in Tiger Dollars, and then we are going to donate $120 in cash in your name at the Salvation Army. So check it out on the front page of TFNN. It starts today. It is good until December 21st. And as I said a little bit earlier, you get an extra 25%. And I think the only time that we do the 25%, I believe, is when we do this Salvation Army deal. So you can check that out on the front page. Now, as you're over it at that front page also, Mr. Basil Chapman is going to be doing a great workshop. And the workshop is all about the Chapman Wave #1, and specifically what it's about, though, is that the Elliott Wave V and the Chapman Wave. This workshop is going to be a week from this coming Thursday, 6 to 7 p.m. Eastern Standard Time. You have to be a subscriber, one of the subscribers to the opening call, but you can go sign up for the opening call right now, be a subscriber, test drive it for a full month, and come into the workshop. So you can check that out right at TFNN.com. I go back to these markets out here, and what you're going to see inside the market is that, let's go to the small caps. So the SPY, the S&Ps, that came down on volume. The IWM, however, actually got to a higher high and had volume come in it. So I would not be shorting that IWM just yet. 120.07 we got till today. Did 28 million shares. Last high up here was 35 million. It failed there, but bottom line, you still got some juice into that arena. Inside the Dow Industrials, the strength versus the weakness, this is what it was. The strength inside the Dow today was Caterpillar. That was up $1.43. Chevron was up 95 cents. Intel and Microsoft. It's pretty wild when you think about Intel and Microsoft. Old line companies, but bottom line, they had the strength inside the Dow. Taken away from it was Merck. Merck was down 95 cents. Walmart, still problems with Walmart. Walmart was down $1. You had Nike off $2, and Disney was down $1.66. So inside that context, of course, Walmart's been going down forever. Disney has been going down for the past few months. And what did happen is that Friday, when it was a half a day, Disney came out, said that they had lost 7 million subscribers on ESPN. That gapped it lower. I suspect you're going to see more problems out there. What we did have over the weekend is that this was the first year that the clicks, meaning internet selling, buying rather, overtook the bricks. So clicks have overtaken the bricks, and that's the tipping point. Now, that being said, watch this. We go over and we take a look at Amazon. They just may decide, AMZN, that they're going to sell the news on Amazon too, because Amazon today did have a high of 681. We closed at 664. You had price spread and you had an expansion of volume. And let me tell you, coming back from vacation, today could have been a much slower day in the marketplace. You get these expansions of volume, very subtle, under the radar. Amazon looks like it's going to now make the run down to 649 to 622. You know, 622 is a high volume swing low in Amazon. 619 is game, you know. So if in fact we see that, what that's going to be all about, that's going to be the sell before all the rest of these numbers come in. Apple still can't get out of its way. In fact, into the close out here, someone unloaded Apple in a big way. Let me actually take a look at this trade. This is a monster trade, man. Yeah, 4 million shares, 4.6 million shares, 700,000. So 5.2 million shares got sold into the close out here today in Apple. Big number, man. Someone is unloading Apple, and it looks like they're unloading that with a vengeance. We go take a look at the some of the higher volume stocks in this market right now. You had Freeport-McMoRan up 8 cents. GE was off 42. If you want to just see the bond market in general, this is pretty intense. Morgan Stanley, now they went up today 52 cents. They announced that they're unloading 25% of their fixed income desk. And that's happening right now within the next 2 weeks. That's pretty intense, folks. I mean, I don't know how many people are in their fixed income, but you're talking about that's a big number, man. What they're looking at, I'm sure, is that they're looking at that it's going to be a lot harder to make money inside the bond market. You know, bottom line is that we'll see whether these other broker-dealers do have that type of layoff in mind, or in fact nothing in mind. You know, as volatility decreases inside the bond market, I'm not quite sure whether it will, but I suspect that as bonds are going up, no one wants to be holding the bag. That's how the whole thing does shake out. We go back over to Walmart, just looking at the correlation inside clicks versus bricks. Walmart was down $1, 13 million shares, and that's an expansion of volume on the way down. That's saying, hey, guess what? Walmart can go right after its lows again of that 56.36 area. You break that area, oh, that's going to be some trouble. The oil market, this is oil market, zero traction out here today inside the oil market. In fact, what the oil market is doing is it's pressing into its lows. You had the expansion of volume that is out here. We've done 347,000 contracts. That is coming into it has a high volume swing low of last week, which is laying out there of $40.41. You break that 40.41, man. If we break that with like 500,000 contracts, that brings the odds much higher that you're going to go into the $39 level. And guess what? Under that $39 level, folks, is $32.40 from 2008. Pretty amazing. You stay right there. We're going to have our man, Mr. Kevin Hinks, coming back from TD Ameritrade Think or Swim. Bottom line, Kevin has the best option show on the planet delivered right here. 12 o'clock on Tuesdays. Get it right in your cell phone. TFNN.mobi. You stay right there, folks. We'll come right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new Yield Pledge money market account with funds from another financial institution, or deposit new funds into an existing Yield Pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish down 78, NASDAQ off 18, S&P's off 7.5, and as we do each and every Monday at 20 past the second hour, we have our man, Mr. Kevin Hinks. Folks, every Tuesday, right here at noontime, get right on your cell phone, TFNN.MLBI. Kevin has the best option show on the planet. TFNN.MLBI gets you full audio. You want video, just go to TFNN.com. You're going to see Watch Tiger TV. You can hit that. You're going to get the audio, plus you're going to get the charts with the great strategies that are set up. Now, if you haven't test drove the Thinkorswim platform, you can come over to our website at TFNN. You're going to see a banner on the top and the side. You can hit that banner, bring it up. You can trade with paper money. I use it each and every day, whether you're trading options, currencies, commodities, or equities. Okay, it's an amazing platform. They upgrade it on a continual basis. In fact, I think we're in the thousands right now in the upgrades, and it's really cool though. It's just one button in the morning, and the bottom line is that everything upgrades. Kevin Hinks, what's going on?
Happy Monday, Tom. How we doing?
Happy Monday. No, isn't it amazing? Thanksgiving's over. Wasn't it cool having 4 days off, man?
It was. I didn't know what to do with myself.
I'm telling you, man. I think this is the first time, like, you know, without like a vacation, that you have really 4 days. It's like, oh, but this is a trip, man. You know.
Yeah, I couldn't really. I was still trading grains Friday from till noon, so
okay.
I couldn't really get away from it too far.
I know. I didn't do a thing on Friday. I'm glad I didn't. But anyway, so you know, when we look at this market out here, you know, we're coming into the end of the year. You know what I think is going to be pretty cool, Kevin, is that, you know, this is the first year. We've been up since 2009. You know, I was talking about, so 2009 to 2000 and, you know, beginning of 15, of course, it was a one-way deal. But I'm really, like, my head's spinning around saying, okay, is it going to be tax loss selling? Because there's a lot of equities that are down. Or are they going to sell some winners, you know, to bake these off, because this is like the first year that we've gone sideways for a year.
Quite a while.
Yeah.
Tax loss selling. There's a term that you haven't used in a couple of years, huh?
7 years, exactly. This is the first time, right, that since 2009. I can picture why people last year. Guess what? It was a one-way market. But this year, the indices are up, but you do have a lot of equities that are down, and they've been down pretty good too.
Sure.
No. So,
yeah, I mean, some are having nice years, but a lot of, let's put it this way: the Dow's down about just over 100 points for the year.
Right. Pretty intense.
Yeah.
So it's going to be wild watching this whole rest of the year come into fruition. What I love to talk about, we get a real surprise for you folks. Kevin does, if you are a Think or Swim TD Ameritrade client, you know that Kevin does swim lessons every day. So now Kevin is going to do the option program tomorrow. But we are going to kick off swim lessons here, a week from tomorrow, Mondays and Tuesdays, right?
Live on the TFNN platform.
I know.
Swim lessons.
So talk to us. Tell the clients, tell all the listeners, what are swim lessons? What do we do here?
Here's what swim lessons are, in a nutshell. What we're going to do is we'll do, much like the show I do, the Options Hour on Tuesdays, we do a different options lesson, strategy lesson each day.
Right.
And we talk about the general market, and we throw on, simulated practice trades to show you how to do it. And not only do we instruct on options, but we show you things that we're doing.
Right.
And we give a whole hour. It'll, for a lot of people that listen to the Options Hour, it'll feel very similar. But except we're going to be doing it Mondays and Tuesdays now. We talk about the overall market for a few minutes, and then we'll go into an options lesson, much like we've been doing.
And folks, what's really cool, what I love too, Kevin, that you guys start doing, is that what they do, folks, is that when and you can just go over to Think or Swim yourself and go check this out. When we sign in every morning, they have the whole schedule up.
Right.
As to what they're going to be talking about. That's really cool, man. I mean,
Right, so we have our topics made out for the entire week.
Yep.
Monday morning when you go on, so you'll be able to see and what we're going to be talking about that day, what topic we're going to be dealing with.
Yeah, and it's huge because, of course, what does happen, everyone's different, right? Everyone's looking for different strategies. Do you know what I mean? That's what I've found when you start doing that. It's like, oh man, this is really cool, man, because there's certain things I think that people want, like all of the above. That's what makes trading so cool, actually.
Right. So we're going to have a lot of fun. We're very excited to have the TFNN audience come into our house and let us do swim lessons.
That's a beautiful thing, man. I like it. No
More
doubt.
time with TFNN is all good.
That's a fact, man.
Yeah.
Close that.
You got. I'll tell you, you got to start. You got to talk these guys here and getting us a road trip to Florida in the winter.
We will do that, man.
Live from the TFNN studios. How can we get that?
We can get that, man. That's 2 hours and 20 minutes. I know that flight so well. And it's
January in Florida sounds better to me than Chicago.
Okay, we're gonna get that date, man. We are gonna get that date. Hey, let me ask you something.
You all heard him, folks. Everyone listening, you heard him.
I
made
did.
An oral contract.
No, Kevin, that'd be awesome, man. That'd be awesome. Let me. Do you play rugby? What do you play?
I played college rugby. Well, I played rugby up until I was 50.
Yeah, man. I saw a picture of you, man. I just saw it over the weekend, man. Yeah. You're a rough little character,
my goal,
man.
Some people have goals to run a marathon or something. My goal was to play rugby at age 50.
Good for you, man.
And I did it.
That's a great game, man. I love that game.
Yeah, it's a great game.
So you played that in school too?
I played it in college, yes.
Wow.
Yeah, that's where I started playing.
That is cool, man. Not many people play rugby, man. I remember when I was a kid, I used to watch them down the park, man. What the heck is this game, man?
Right.
It was a great game, though.
It's a great game. It reminded me how much I love sports.
Yeah.
I'll tell you what, it was, one of the best things I did. I didn't start playing until I was in college.
Oof.
And then I started playing, and I finished at about 50. Then I started saying, okay, that's enough.
That's
but I
awesome.
wanted one more weekend in the sun. At age 50.
That makes sense. Though. You're a trader. You got to stay in shape. That totally makes sense, man.
Yeah, it fits.
Yeah, oh, it definitely fits, man. But I love watching that sport. You guys all look the same, though. You know what's so funny, Kevin? I was sitting there at home. I said to Britt, I said, look at this Kevin right there, man. And I could tell, because you guys all look the same.
Was there a bald guy playing rugby?
Yeah, no, you too. It's a good look, but it's really funny, man. Do you know what I mean?
Yeah.
It really is.
We all got that beat up look on our face. And,
it's not a beat up.
Crooked noses.
It's a beautiful look, man. Well, listen, man, we appreciate it. We look forward to the swim lessons every Monday and Tuesday. It's going to be awesome. Look forward to the program tomorrow. And, bottom line, folks, is that if you're in the option market, you want to understand strategies. And that's what Thinkorswim, Kevin, his, gang, I can't call it a gang, but bottom line, his team is all about, which is really so cool, okay?
Right.
So, knowing what a strategy is going to do so you don't get backslapped in the head, because the worst thing, which I've said many times, is that you're right on the aspect of where you think an equity is going, but you set up the wrong strategy, and that's...
Exactly. And that's what we try to teach every day.
Yeah.
Fitting the right strategy to the right volatility and stock environment.
Yeah, and hey, how about that? It's interesting, that Morgan Stanley getting rid of 25% of their, bond traders, man. That's intense. Man, that's intense, man.
It's a big number.
It's a big number. Okay, brother. Well, listen, we look forward to the show tomorrow. We look forward to getting you down to Florida. We're gonna make that happen, man. I like it. Oh yeah.
You to that.
Swim lessons right here at TFNN, man. Yeah.
I like it.
All
I like
right.
the way that sounds.
Okay. Have a great one, Kevin. Have a safe one.
You too, Tom.
Thanks, man. Stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom, take Take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We had the Dow down 78, NASDAQ off 18, S&Ps were down 5, and man, there's a lot of reports coming out this week. One of the large reports, folks, are going to be coming out of Canada, and what that's going to be is that their national statistics for their gross domestic product in the third quarter is going to be out tomorrow. And of course, what ends up happening is that it's all about oil in Canada. So we'll see just how bad that Canada actually has got hit with the downdraft that has taken place in oil. Because when we take a look at oil, it's pretty amazing actually. CL1 in 1 year, we put this up on a yearly basis, and this is just amazing. So 1 year ago, right where we are right now, folks. Oil was $69. Now, watch this, CL1. This is where this gets really interesting, because that was the downdraft had already started. If we go 2 years, let's go this. So here's January. There, 69. Okay, so last December 1st, we're at $69. But check this out. This is where it gets really sick. You go to June of 14, so it's a year and a half ago, we were at 107. So you go from 107 to 41. Now, what we're doing right now is that it looks like we're going to build cause to go after this swing low of $37.75 on this contract. We break that contract, man, it's going to be heavy duty on the way down. ExxonMobil, we take a look at a few of the equities. Now, ExxonMobil and Chevron, they came off their highs, and they came off their highs with big volume. Decent deal. That being said, guess what? You had the spike out here today in Exxon. It couldn't hold price. You were going into 16 million shares. We did 17 million. What that sets up is that, yeah, it can retest the high out here today. But bottom line, it looks to me like this thing wants to get down at the 77.91. We'll see whether it wants to go lower. We look at Chevron, CVX. What you have with Chevron, same type of setup. Chevron also looks like it wants to go lower. In both cases, they will have the shot to go test the highs of today, because you did have an expansion of volume. That being said, the contract itself looks like it not only wants lower price, it wants dramatically lower price. We go over into the gold contract. We take a look at the GLD. Now, the GLD, gold got traction today. The GLD got traction today. 6.3 million shares in the GLD today. That's a good number, folks. We had done 4.9 on the way down. That was a half a day, though, bottom line. The GLD still has to get back inside. We're at 101.92. You got to get back inside this 104.02 area. Let's go to Brent in Martinez, California. Hey, Brent, what's happening, brother?
Doing well, Tom. How was your Thanksgiving?
It was great. Thanks for asking. And yours?
Oh, very good. I got together with both my older brothers and my wife and my 2 sons, and then some other family, so it was great.
It's a great holiday, man. It's absolutely a great holiday. There's no doubt, man.
I had a question about gold. I have about 20,000 to invest. I was thinking about just buying a couple hundred shares of the GLD, but there's other options like maybe Royal Gold. I just wanted your thoughts on what
I wouldn't touch Royal Gold. Something's wrong with Royal Gold. Royal Gold, folks, this was it's a royalty company. Bottom line is that, high flyer for a long period of time, and this thing got killed. $48 down to $35 the week of November 6th. Do not touch that thing, man. Okay, so now the question is Franco-Nevada. Yeah, Franco-Nevada's not bad. This is another royalty company. What I would do is, okay, so now the question is, do you go for the GLD? You could go for the GLD, your low in the GLD is what, 100.99. So you're $2 over that right now. Even on a dead cat bounce, you get 105. And if it's bigger than that, then that opens up the highs. I mean, the October 14th and 15th highs do have volume at 113. You know, if you go for another way of doing this, and it would be more a lot more risky. Well, see, I don't think it's risky at this point because these stocks are so low, but it's picking out a smaller stock that you like, and they don't have to move that much. You know what I mean? Percentage-wise, they're all going to be the same, but if, in fact, we are at lows, folks, what will end up happening is that the high-priced stocks move, but the lower-priced stocks will move quicker because of the fact that they didn't go out of business. That's kind of where we are in this market right now. In fact, in that same idea, another large commodity fund decided to pack it in today. You know, and each and every time this happens, it doesn't mean you get closer to a bottom in the commodity market, but that's what does happen when the devastation's been so bad. You know, so.
Yeah, this is something longer term, Tom. I have some gold coins and silver coins, and I have the physical silver and gold. I just kind of would like to have something else. This is, you know, I want to hang on to it for a while. So
if you want the okay, so I happen to own a bunch of gold stocks, right? The gold stocks that if I had cut to the chase. It's Great Panther. You know, to me, I'm looking at Great Panther and saying, you know, now picture something. I want you to understand something, folks. I've already been holding this for a year, okay? But in a year, guess what? It hasn't done anything, okay? It's been trading around, 50 cents for a year. My take on this is that, guess what, man? It has a high volume swing point of $5, man. I'll take that risk, you know? So it's just, you know, it's funny, but I want you to understand when I get in it, even when I get in it, I say, well, I'm not going to hold this a year. Well, guess what? It is a year. So, and I don't care. I mean, I've bought more of it. You know what I mean? Because it's the same price. It hasn't been like it's moved around. And I'm not in this, you know, to go make 50 cents. That's the bottom line. You know, so. You know, when I look at a 47-cent stock, they take in $74 million a year. I know Archer, he's not going to go bankrupt. They have cash. You know, it's like, okay, man. You know, I like that trade. So, you know, if you're holding something for longer, that's, you know, that's where I'm at, man.
All right. Thank you, Tom. Just all the best to you and your family over the upcoming holidays. Take care.
Awesome, man. Thanks. You too. You know, and if we look at the, you know, so if we stay with the gold aspect for a second, folks, so picture I suspect 2016 coming at us, right? What the commodity market still has to worry about in a huge way is interest rates going up, the dollar going higher, because everything's priced in dollars. There's no two ways about that. So when I look at that and say, you know, can the dollar go higher? Yes. We know that the aspect of if this dollar takes out this, it's not too much further from where we are either. If this dollar, you know, can take out 100.38 and we got the 100.36 today, that'd be pretty intense, man. That'd be saying that the dollar can get up to 119, folks, which would devastate commodities. If it doesn't, it means that inflation is raging, okay? We'll talk about that as soon as we get back. Stay right there, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks, and let's go over to Asia. We take a look at Asia. So when we were closed, folks, you had Shanghai went down 5%. Fast, furious, all of the above. And this was after a nice counter-trend bounce. You know, just as we had come down in August pretty dramatically, so had Shanghai. Shanghai went from a price point August from 4,000 down to 28.50. You know, talking about 25% downdraft. That was a 25% downdraft in all of 5 days. That's not the last 6 months. Last 6 months, it had gone from 5,100 down to 28. Now, what Shanghai had done, just as we have done, is you do a whole counter trend bounce. So August 24th, you're at 28.50. 2 days ago, it was at 36.68. Big number, right? You know, you're talking percentage-wise, monster number, 2,800 to 3,600. Bottom line, falls out of bed with monster volume, by the way. You get down 5%, and what this was about is a selling, of course. They got another scandal over there. Bottom line is that, well, I'm not quite sure if it's a scandal. The bottom line, the government's going after 4 major broker-dealers. It'd be like going after 4 of the major banks around here, okay? Big problem. So last night, what happened? Last night, we got down to 32.27. Ended up a flat market, a rejected lower price. Had volume, though. You know, it was lighter volume than the day before, but you still had volume. So what does that set up? Well, that sets up that you're going to be back down at these lows. And, you know, we'll see, in fact, is this going to build some cause to try to blow out the low that was established August 26th, rather. Yeah, their low was August 26th. Ours was the 25th. And what you also have here is this. The 3 black crows that I've been talking about in our S&P, that's exactly what Shanghai has. That is how it's set up. It came up, it tested them, it fell apart after that test. If we go over to the Nikkei in Japan, what you're going to see with the Nikkei in Japan, same setup at a higher number now, bottom line. The 3 black crows in Japan start at 20,246. Well, that counter trend bounce only got it to 19,990. That being said, what you do have is that this downdraft in Japan was pretty incredible. It went from 20,900 down to 16,900. So you're talking about 3,000 points down, off 15%. And what the Nikkei did last night is had an expansion of volume. So the Nikkei we did 1.6 billion shares last night after making a high with 1.1. That sets up the Nikkei that the Nikkei looks like it's going to run down now to 18,700. That's 2,000 down from where we are. These markets, Asia will be open in a few hours. It looks like they want to continue to go to lower price. The DAX in Germany doesn't look bad. Bottom line, that's had quite a run on the way up. Yeah, that was up $88 today. It closed at a higher high. So that's saying that, yeah, it can get higher. The FTSE in the UK, however, that baby went sideways, had an expansion of volume as it moved sideways to slightly lower. King dollar is going to be the number, folks. This commodity market and King dollar, that is what it's all about right now. And what I do expect you're going to see, and it's going to be a one-way trade again, is that now everyone is bullish the King dollar versus bearish the King dollar in 2007. And, of course, what we've done since 2007, this has been a one-way trade. It was a one-way trade. If you want to see the bigger aspect of it, this is what's really wild. The bigger aspect, 2002, King dollar is at 120. 2008, we're at 70. 2015, we're at 100. The number to keep your eye on is 100.38 on the continuous. We'll see whether it can take it out. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow. Go get them, folks.